Round of applause for all of y'all for being here. We are back with another live, and this time episode one of a new series for the private group on Facebook and for anybody who wants to be introduced to some new content. We got it for you. Episode one, we will get into a couple simplistic things. Yes, I did take notes because I want to show y'all how important this is for me, and I want it to be as important for y'all. Get you a notebook, get you a pen and pad, get you a notebook app on your phone. Let's say that's necessary, and then we will get right into it. In this episode, we will go over a good amount of topics. Yes, if you see me looking down occasionally, I'm going over the notes I've just gyrated, written down. Let's use that terminology. And we will be sharing the screen as well. So let's get on to topic number one. What is a stock? I want this group to be for beginners, so we will start from there. Uh, let's see how I can share screen. I can share screen. Let's go. And let's do entire screen. Or let's say window. Okay, let's go. All right, we're going to window and we're going over what is a stock. Now, I would happily say Google and YouTube will be when it comes to learning this information. It is a type of security that represents a share of ownership in a company. By buying stock, investors raise capital for the company, part owners or shareholders who can potentially profit success. Stocks can be bought and sold on stock exchanges like the NASDAQ and the New York Stock Exchange. Now let's go back over here. I'll stop that really quickly because that hit two topics that I've already got over here. What is a stock? Let's break it down for the average person. A stock is a slice of a business. It shows you that you own a small amount of a company. So let's say you just started your own like barbershop or you just started cutting hair and you own this business. Let's say you went got your LLC, even got you a website or whatever, created some business cards. You start handing it out. You start taking pictures of your work, posting it on Facebook, tagging people, saying, "Hey, this is my shop," or "This is where I be at," or "I pull up to you." And this business is profitable, putting some cash into your pocket, etc. And only you own this business. You own 100% of the stock. Now, let's say your business does very good, and like an uncle, an auntie, somebody that's at another company who knows you, sees what you got going on, and they want to buy into what you're doing because they like what they see and they believe in you. Now you sold stock in your company and you got an investor to participate with the success of your business. Let's break that down a little bit more. You gave up some of your stock for cash to invest into your business and make it grow. This person is now part owner of your business. Now, whatever happens, let's say the business becomes super successful, both of y'all can share in that success. Or let's say the business fails, both of y'all participate in the failure. So we will get more into that. Yet, let's say this business becomes so big and you want to take it to a whole nother level. How do you actually get stocks is something. Let's go back to sharing screen. Go window, entire. Okay. Okay, now where do you stock? Buy stocks through an investment account with a broker. such as an online brokerage, advisor, or a full service broker. To break it down to the average person, a broker is like I have right over here. I have Charles Schwab already up, and this is the brokerage I mainly use. I have a couple others, yet you see how we have equity right here. That means a stock. That means that you're getting a portion of the company right there. Options is something completely different, yet similar. You're getting a contract to 100 shares per options. That's a whole nother different thing. I'm still learning it. That's more complex. That's for future videos. Yet this is my bad. This is Chipotle because Chick-fil-A is a private company. This is Chipotle Mexican Grill, and they're on the New York Stock Exchange. So you can go to your brokerage, and you can buy a share or multiple shares of said company. You just type in the ticker symbol. We will get into another video. Yeah, a ticker symbol is like a stock nickname where you can type this in and it'll bring up the specific company that you're looking for. Now let's get back over here. Like I said, that's a brokerage. Now we're about to stop and get back to why are stocks important. Um, have y'all ever heard of something called a 401k? Um, how do y'all feel? Let's say your 401k does a good 4.2% a year. Would you actually be happy about that? Do you even know what goes on with inflation? All right, let's get back to the main screen once again. And we're going to share this. Okay, US yearly inflation rate. This is why most central banks and governments closely monitor the annual, that means yearly, inflation rate to ensure it is at a balanced and modest level around 2 to 3%. Now, let's go to calculator. And let's say your 401k, because over a long time span, it tends to do this, does about 4.2% a year. Now, and I'm gonna make this make sense very quickly. This is gonna be an hour, so feel free to chop it up in different pieces. I'm aiming for an hour. Let's see how much time we got because my phone is on 22%, so I'm gonna have to work that out. So let's say your 401k yearly does about 4.2% over a long time span, and inflation is like 2% that year. That means is that your total return that year in the 401k is 2.2%. Whereas let's say it's 3%, then your cash only grew 1.2%. Now, the importance of having stock is, let's say you are in a specific position with a company and they give you X amount of shares. This could help your wealth grow exponentially. How how so? Let's go to a site called Finviz. I'm gonna go over here, and this is Finviz is a free website. More on this very quickly, very soon. Yeah, we're gonna hit Insight. We'll come back to this as well. Yeah, just to give y'all an example, you see these are different companies, different ticker symbols. And these are different people who work at these different companies. It shows you the relationship this person has with the company, the date these things happened, when they sold or bought stock or was given stock. And they show you this over here. It shows you the cost of the shares, how many shares. This person right here, this I think it's Maria Smith, if that's how you, if you're, yeah, Maria Smith. This lady just sold 5,000 shares at $280 a piece today. Did this happen today? And she made $1.4 million selling stock. She worked at this company. Now this person, this Brian Halligan, same thing. This is supposed to happen today at $446.98 a share. That's 8,265 shares. This person just pocketed $3.69 million. Let's go on down. This investment group, let me go back. This private investment group yesterday sold 482,000 shares and pocketed a gross of $43 million. That's a difference between being paid in equity and having a 401k. Equity could grow your wealth crazily, like Warren Buffett, Bill Gates, like who else? Because even Jay-Z once upon a time, I think he and Beyonce were paid with Uber stock instead of just getting paid for performance, and got a great return. Nas got a great return from having, I think it's the ring thing. Even 50 Cent got a great return from vitamin water. Having equity in a company can grow your wealth crazily. Crazily. Wait, I'm apologizing. Stop sharing screen because y'all saw me. Let me redo that because I want y'all to see exactly what I was looking. I need to switch things. Okay. Action, viz. Okay, I have to do that once again. This is FinViz, so y'all can see it. Like I said, it's the home button, and we will go over this more. So stick around. We hit Insider. I like to work on my laptop, and like I said, this Maria Smith lady sale happened today, and she pocketed $1.4 million value, right? And this Brian Halligan person, the sale happened today, made $3.6 million. Now back down here to the investment group so y'all can see exactly what I'm talking about. And it shows what this person is to this company. Like they are just shareholders. So maybe an investment group who pulls in cash together and buys stock, and sometimes they buy whole companies and stuff. Like this is the president CEO. This person sold 75,000 shares and made $70 million. The investment group made on this transaction $67 million. So being paid in equity, getting shares in a company is very, very important. It can grow your wealth much faster than a 401k. And soon we will get even more in depth of different returns. I have that in a private group. I will show y'all a little bit about that very, very soon. So let me hit tab. Okay. Let me close this one and share screen with the group very soon. All right, this is our private group on Facebook. Like I said, the different returns. I'll have to find it. Different returns. Yeah, that's an older post. And this is a private group where we talk about stocks more in depth. There's over a year's full of content. We'll explain more about this later. Just give us more time. And like I said, this post I did last year about different returns and all that, if I'm not mistaken. Yes, okay. So, like I said, inflation, as you see, is about 2 to 3% a year. This is like 5%, so I said about 3%. And we will get more into this later, but there are different investment vehicles 4.2%. So you see how inflation is very close to this. That means that your cash really isn't growing a whole bunch with this. Now, I'm not telling y'all any information because, well, I'm not telling y'all what to do, but I'm giving y'all information of how I treat my life and how I move around when it comes to investments. Like a professional stock investor, this says about 20%. In all actuality, you can get a lot higher. Professional real estate investor, you can get a lot higher, but this is just possibly on average about 15%. And a professional stock investor can get about 20% each year. That's a lot. Don't let that fool you. That's a lot of great returns. How so? Um, let's just quickly pull up this calculator. Let's see if I can see it on the screen. Okay, that should at least. All right. Let me see. I'm going to change live action. This calculator. All right. There's something called the rule of 72. It's a quick estimate of how fast how long it will take for your cash to return to you. The higher the percentage, the quicker it'll come back. The lower the percentage, the longer it'll take. So let's say 4.2 divided by 72. Oh wait, that's not right. 72 divided by 4.2 is about, it'll take about 17 years for your cash to double, for your full amount to come back. And the bare minimum, the stock market on average does about 9 to 12. I like to say about like 10 to 12%. So let's do that divided by 11, just do a quick rough estimate. That's 6.5 years. So about 7 years. So less than half it'll take for a 401k to double, or for a 401k to come back to you. That's very important. That's why I say you may see the number 11, or you might see the number 10 or 9. Yet I will explain in another video of how that percentage itself could give you a great retirement with limited effort from you. Now, back over here. Now, some people may be thinking, like, dang, I see what you're saying, but stocks are risky. Or what if the stock market crashed? Or maybe even like, I don't want to lose any cash, or maybe even, am I guaranteed a return? Like, I see how you said the 401ks 4.2% every year over a long time span. How can you guarantee that I'd make X, Y, Z? I'll be honest. In life, there's only two guarantees: death and possibly taxes. Possibly because in the future we will go more in depth of how you can legally avoid paying taxes. Future videos. Do your due diligence and do your research. Yeah, let's attack the first one. Stocks are risky. Driving's risky. Reading a book is risky. Sleeping with your door open is risky. Leaving your doors in your house and your cars unlocked, it's risky. Eating your favorite food is risky. Going to your favorite retail or grocery store is risky. To you, it may not be risky because it became so habitual, became a habit, an everyday thing you put no out into, yet that's risky. Buying a stock is risky a great amount when you don't know what you're doing. Yet, let's say you're in a new area, you're new to town, you don't really know anybody. That's a high risk situation. Yet, let's say you start going out, you start networking, you hang out with some coworkers, you join a small book club, you're helping around the community, and then more people see you, more people recognize you. Or let's say you go to college in a new area and you just start talking to everybody. And now enough people walk up to you and say, "Hey, so and so, I saw you here. I saw you there." Now it's becoming less risky because you know more people in that area. Just like stocks, it's very risky when you don't know what you're doing. When you're just buying something because somebody told you to, or you're just buying it because everybody else is talking about how it's going up, or you're just buying it because it's a penny stock or whatever. That's risky. The stock market is no place to be gambling. They have lottery, they have casinos, they have people in random areas shooting dice. That's the place to gamble. The stock market is a place to invest. The next thing to talk about is, what if the market crashes? If the market crash, hallelujah. Hallelujah, especially when there's extra cash in pocket. Why? Like I said, you go to your favorite grocery store. They have your favorite bags of chips, your favorite clothes. They got the TV you've been looking at for a couple months, all on sale. Your favorite bag of chips is not nor 9 times out of 10 about, like, let's say $2 to upwards of maybe even $6, depends on where you are. And they go on sale for 25 cents or 50 cents chip wise. Your clothes, they were like $35 for a shirt, maybe $50 for some pants. And they go on sale for like $5 for the shirt. And the pants are a good 10. You telling me you wouldn't go and get that TV you've been looking at? It was selling for like $500 to $1,000, and now you can go get that Joker for 150, and nothing's wrong with any of these products. You telling me you wouldn't go and get that? You telling me you wouldn't participate in that sale? Or are you going to have a cart full of stuff? Let's say you have the right amount of cash sitting aside to capitalize on it. That's what needs to go in your mind when the stock market crash. Do I have enough cash to sustain what got going on and still make a purchase that's going to benefit me over the long term? That's what needs to go in your mind when a stock market crash is brought up. You should be getting happy. You should feel sad for the people that this is going to affect, but you should be feeling happy that you have had a couple dollars or more than a couple dollars put on the sideline so you can capitalize on this sale of a lifetime. The next thing I talk about, I don't want to lose cash. Now, I'm going to tell you this. You're guaranteed to lose cash when you don't invest. You're guaranteed. You saw how inflation is about 2 to 3% a year. That's losing cash. You have a car. You see me in my truck right now. You're losing cash. You buy a house for you to live in or you're renting. You're losing cash. You're already losing cash. Whereas with the stock market, as you learn what you're doing and you know your risk level, more on that in the future. You understand that you lose cash when you buy high and sell low. You don't dollar cost average down to bring your cost down. You lose cash when you don't know what you're doing, don't know what you're buying, and you're listening to the wrong information. I'm not worried about me not getting a return in the stock market. Why? Because my mindset is the stock market is helping me build wealth for the long term, for the long time, for retirement. Now, can stocks give you a quicker return? Potentially, yes. Have I seen it? Yes, I have. Yet your mindset should be over the long term. Why? We're all getting older. Inflation is causing a lot of stuff to continuously go up in value. When things continually go up in value, that means you got to keep making more cash. Your cash should outpace inflation by a decent amount. And if you're afraid of losing cash, there's things called bonds. There's other instruments. Yet you're going to lose cash to inflation. Everything will continuously go up. Let's show you the inflation calculator. We're going to share screen once again. Type in inflation calculator. I hope y'all having a great day as well. CPI inflation calculator. All right. Let's say, using that example earlier of a $35 shirt. Let's say you bought this January 2021. Let's just do that. And calculate it into days' time a couple months ago. That means that same shirt will have to be bought 4 years later at $43.35. Let's see this number in the year 2010. That same shirt would cost $52.33. Now, let's go to the year 2000. That same shirt would have went up over $32. We'd have to spend $67.18 to get that same t-shirt. May I add, the same t-shirt. The same thing you put on, you take off, you put on later on, you take off. Make sure you wash. You put on, you take off, you lend it to somebody, you forget they got it. Somehow you get it back. If you get it back, then it get a hole in it. Then you gotta replace it. Yet, let's say you love this shirt back in the 2000. You haven't seen it in 10 years because your cousin Earl stole it. And then you see it randomly in the same retailer you got it, but in a different city. And this joker went from $35 25 years ago to $67.18 now. Wouldn't that make you mad? Wouldn't you be saying, man, I remember that thing was $35 25 years ago? How in the world this thing is $32.18 more? It's called inflation. That 2 to 3% a year is crazy. Now, like I said earlier with the 401k, yes, you can get that 4% every year. That ain't bad for some. Yet, are you just looking to strictly keep up with inflation with your cash? Or would you like your cash to have more financial impact to give you more comfort? That's why investing is important. I refuse to guarantee you a return because nobody knows the future. Are you going to live where you live for the next 40 years in the same house or the same apartment or in the same city or in the same state? Do you know what you're going to eat 30 years from now, the same day, the same month? No, because nobody knows the future. I can't guarantee you I'm still going to like Doritos when I'm 60. I know right now I like them. I can't tell you I'm going to be drinking water from a well in 3 months or 3 years. Nobody knows what the future holds, and that's why we cannot guarantee you a return. Yet there are instruments that we can use that can give us that cushion. More on that soon. Now, let's say you want to increase the likelihood of getting a nice financial return. There are free things that you can use to help get you there. Free? Yes, free. Free? Yes, free. Let's introduce some of those. First, we're going over to Yahoo Finance. Um, let's do that. Now we're going to share Yahoo Finance. Let's do entire screen. So this way I can get several different tabs. Okay, we're going to Yahoo Finance. Yahoo Finance. And tool that you can use for a multitude of different things. Bars. Like, I'm not an advocate of crypto, yet they got crypto. I said that's a whole other complex things. Private companies, the different stock market sectors, bonds, futures, not the currencies like different cash in different countries, world indices, ETFs, mutual funds, that good stuff. You can get access to a lot of this free information. Some of it you can pay for, yet a lot of this information and learn how to understand stocks. Uh, Another one, and this is when you want to learn the more complex stuff, is called finance charts. You can go look at their financials. Like I got Chipotle up here. Like I have a Chipotle to keep the example very, very simple. We're going to add Chipotle up here as well. And no, Chipotle did not sponsor this video. I'm just using this because a lot of people know they sell food. When it comes to what makes it easy is staying where you know what you know. If you know what they sell, you know what they do, you know how they can make cash and lose cash. If you can explain why you bought this stock to you understand what you made in investment in. If you cannot explain it in simple terms to a 5-year-old, you should possibly not look at that. Now, the difference between is the fact that Yahoo Finance gives you a certain amount of information before you need to upgrade, and they'll have you pay for it. This is something you can use to get a quick snapshot of what's going on from like today's time span, the trailing 12 months, all the way up to a couple years. Whereas financial charts is like, let's say this company is picking your interest and you want to look more in depth into their numbers. Finance chart can take you, like, this is different quarters, okay, several years ago. Like this 20 years of information from almost 20 years from 2005 to currently 2024. That's almost 20 years of information right there that can help you get a better snapshot of what this business has done, etc. And these are the numbers. These are the metrics. But like I said, this is more technical stuff. This is on down the line information. You don't necessarily have to understand this now. I wouldn't put that on y'all. And this is Charles Schwab. You can have Charles Schwab account. You can get that for free. Like brokerages, you can get those for free. You can start today. And let's say you want to a free fractional share, we can add a quick, easy, accessible link to Robinhood. So y'all get a free share, I can get a free share. Y'all start the brokerage. Y'all can go out and share it with everybody else around y'all over a certain amount of time each year, and y'all can have X amount of free fractional shares of the stock. So we got you. Now you can use all these different sites to be able to help you potentially get a higher return. Still cannot guarantee. Yet another site, well, not another site, yet to get back into the conversation of the rule of 72. We're about to share the screen once again and go more in depth into that area. So let's go. Like I said, this is the inflation calculator. Now Google to explain. The rule of 72 is a simplified formula to estimate how long it will take for an investment to double, calculated by dividing 72 by the annual rate of return. It can also be used to determine how long it takes for cash to lose half its value due to inflation. For example, an investment with a 10% annual return will double in about 7.2 years. 10%, about 10 to 12% is the stock market, the S&P 500. They do that annually over a long time span. Takes about 7.2 years. Now, 401k, that means it would take about 17 years. Well, over 17 years to do the same thing double. That's a long time. It's going to take you about 20 years. Like what we saw over here with Chipotle's performance, wasn't that almost 20 years of information? My bad. Financials, that's my fault. Their revenue. So let's say, for an example, you bought Chipotle here in the year 2005. Now, let's say this is the year 2025. It took you 20 years, almost 20 years, cash to make cash. Wouldn't you be irritated? Wouldn't you be mad? Wouldn't you say, dang, if it took me almost 20 years for it to double one time, man, would you be actually happier that it took 7.2 years or almost 10 years for it to double once? And the more you know what you're doing, the higher return you can potentially get. So that means it'll take a less amount of time. Yes, you will have to invest more time to do so. You want something simple, you can get a cool 10 to 12% annually every year. Not that hard, not that difficult. And we can go over here to explain how. So we're going to type in investment calculator. There's an inflation calculator. This is an investment calculator. And what I like to explain to some people is, let's say you have $2,000 in your pocket right now, and you want to invest. You can get the S&P 500, and let's say 17 years, just like the 401k. And every year you put in $3,000 at the beginning of each year. let's see what y'all would actually have in 20 years. Let's say, wait, my bad. Let me change that. Let me change that. About 11% each year. And about 20 years, 17 years, you would have $159,977.99. So the total amount of cash you put into buying the S&P 500 is $51,000. Now, 20 years you put in $51,000. Yeah, the amount of cash that you made off just your investment is over two times that. So you made two times your cash. And that same amount of time, let's say you would have just put this in the 401k. Let's see what you would have had just put it into the 401k instead. You just have almost $80,000. So that means is you put in more cash than you got off your investment. Your investment is just $26,000. Whereas like how people say, "Oh no, don't buy the SP 500." Just doing something simple. The easiest thing you could possibly do is put your cash into something, and like it's well balanced, and you got other people taking care of investing for you. That's what a 401k is. That is certain retirement funds, and that's what buying the S&P 500 equivalent is as well. You're paying somebody a small fee to invest your cash. Wouldn't it make more sense to have over about $1,000? Oh wait, over um almost $74,000 more doing the same amount of work of just giving somebody else a small fee, and they're doing the investment for you. And that's just the simple side. We haven't even cranked out that. So I can't guarantee your return. I can't guarantee you what historical data has done, and you might get the same thing. I'm a good 75 to 85% sure that will happen. Now, the rule of 72, um, to go more in depth, like I like to have a basic amount of return per year baseline because I like to take a higher risk. I have a higher number than 11%. Um, and you can use these calculators. Like I said, these are free sites that you can to. Like I said, we were going back to Finviz. We click home. We can click maps, just like same thing. Go over here, hit the market, hit the sectors. It's going and this is the same exact thing. Right now, this all they were talking about stocks, but I don't know what's going on over here. I ain't know how to read it. And let's say y'all take this serious, you do your work, your due diligence. You will know how to, like I'm looking at this and I'm like, okay, I know exactly what area I need to fixate on. Yet if this looks too complex, Yahoo Finance has one as well. Same thing, just more simplistic. And like I said, in the group, we have a slew of information over here that can help y'all. Like we have different files over here where there's different sectors of the stock market, breaking them down. And you don't necessarily, let's say you have a laptop and may download to your laptop. Yet with your phone, you can just click this and it'll bring up the different sectors, the different things. So let's say y'all wanted to learn this. This is understandable. Google's your best friend. YouTube's your best friend when it comes to learning this stuff. Books are your best friend because yes, y'all can go out here and learn this information for free. I won't ever say, and I won't ever stop anybody, but I do have a private group that got all of this stuff combined so y'all can understand this more in depth. Like I can show you a little bit more as well of like what's over here so y'all can see. 14 people in here. We're looking to grow the group to 100,000. So futuristically, we deals together by businesses, sell businesses, investing companies, by real estate, a great amount of things. And we have, like I said, over a year's amount of content. I have many different private videos already over here explaining and breaking down so many different things. Videos about websites for personal growth, um, like growth versus value stocks. Um, will you be the first wealthy person in your family, or will you keep shooting yourself in the leg? Not metaphorically. Well, metaphorically. Sure. And we have also a Patreon with a couple videos. Now, I can quickly explain to y'all like how to potentially use the stock market all together. You have your brokerage account. I say start with Robinhood first. Go ahead and get that free fractional share. And that one's more simplistic. That one's beautiful to look at. And it's very beginner friendly. You may have seen it before, maybe not. I don't use it like that. I don't even know if I'm logged in currently. Yeah, like beautiful to look at. Like Chipotle. And you can do fractional shares as well over here. Like you type in, like let's say you have $1. It'll estimate the amount of shares you get, and you can spend that $1 over there. Very, very simple. Very simple. Um, and let's say y'all want to see a quick snippet of like what we have over here. I can show you. Like just posted earlier that we got the group going on. We got all of this stuff happening today. First live for the group. Shout out to everybody that's here. People from different countries will soon be here as well, but we got people from different states. So highly appreciate y'all. Like we got motivational quotes, we got different charts, we got different files to help people a year's amount of posts of different files here. Um over a year's amount of like video content, like so much value, so much value. And over here, like I said, we have a Patreon, and soon we'll be able to assist more people in many different ways because we have a book coming as well about stock market investing. And let's say you want to get into our group, what you do is I have my own personal company called Armageddon Records, and you go to ARM Records with AZ store.com and you hit wrap, and it will take you to a small area. And mind you, the Patreon's $5 a month. Very, very simple. The group, we will explain it very soon. Like, and this is where we have our music on my record label, Armageddon Records. Every like single you buy, like let's say you buy one single, it comes with a free private YouTube video for like a specific video about stock. It has that specific information. So let's say y'all wanted to learn. I will always say Google and Facebook are your friends. Yet, if you want more consolidated information, and what I mean by consolidated is something that is broken down for like everyday person to get, then come holler at me. I'm not forcing anybody to participate. I'm still gonna share information, whatever. It's just if you want that, You click each song, and then once you trade the $1.59 with your card, like we got payment plans as well, and then we can get that specific video sent to you to your email. And let's say you want to get to the group is once you trade $25.99 for our first album we dropped on Armageddon Records. And like I said, it's right here is explanatory. One screenshot of it, um, of you making getting it, and you send that with us, and then we'll be able to verify this is specifically you, and we can get you in the group. The group is free. Like I said, you can do 4 interest-free payments of $6.50. Very, very affordable. We made it affordable so anybody, the everyday person, get in. Feel free to get that, and then we will be back possibly next week as well to be able to give you more content so y'all can understand that. And whenever you want to access the private group, let us know. We got you. The link will be here. We can share it to as many people. Um, Feel free to come back and see y'all in next week's episode.